Greetings, friends. In this video, we will analyze market structure together. Market structure is one of the ways price is delivered. So, there are two types of structures, downward and upward. In the downward structure, each subsequent local maximum will be lower than the previous one. The same applies to the minimums. Each subsequent minimum will be lower than the previous one. In the upward structure, it is the same, but in reverse. Each subsequent maximum will be higher than the previous one, and each subsequent minimum will be higher than the previous one. So, we can consider that the market structure continues and it becomes non-declining at the moment when our structure is confirmed, if the price at that moment is going below the previous minimum and consolidates below with the body of the candle. In the case of the upward structure, it is the same. We can read structure confirmation when the price consolidates above the next previous maximum. We call structure confirmation CBOS, which stands for confirm BOSS. BOSS is break of structure, and everything is written here. You can also see the same in higher high, lower low, and their designations. Thus, the trend in the market structure changes if there is a break of market structure, specifically if there is a break of a key minimum or maximum. In this case, the key refers to whether it is a downward structure or an upward structure. The key minimum maximum is the last relevant maximum that will be broken, which will provoke a price reversal. For example, if we have a downward structure and then the price somehow moves upward and consolidates above, we can assume that after the market consolidation above the key maximum, which we denote as break of structure, BOSS, we can predict or expect that the price is likely to reverse and move in the opposite direction, meaning the market structure will change from downward to upward. The same applies to the upward structure. In the event that the price reverses and consolidates below the previous minimum, we can then expect that the price will go down, meaning it will change its market structure and consequently alter its direction. We will mark this place as BOSS. Note that with a valid break of structure, the price must consolidate with the body of the candle above the previous key, maximum or minimum, depending on the structure. If the candle is not consolidated above, and only touches with its shadow, it will be marked as some kind of manipulation. And in this case, there will be no price reversal. So, on the screen, you see two examples where we have a fake break, meaning the price was just moving along, and at some point, manipulation occurs. The body of the candle does not consolidate above the previous key maximum or minimum. In the case of the downward structure, it is likely that this was a manipulative move. In the case of the upward structure, it is likely that, after this move, the price will go down. In the case of the downward structure, it is likely that these were manipulative moves. And instead of movements, it is likely that the price will go up. If we are really expecting structure confirmation, we are interested in having the body of the candle consolidate above the key, maximum or minimum. Then we can forecast or expect that our price will go up in the future. The same applies, in general, to the upward structure as well, or in other words, to the upward structure. So let's talk about price consolidation, as well as major and minor movements. Major and minor movements refer to the primary and internal price movements, or global and local movements. In this case, it all depends on the time frames. Let's say we had a global price movement, after which a range was formed. A range is a certain maximum and minimum that will be key within the range, until the price breaks out of the internal movement, that is, from the minor movement. We will not understand what trend or tendency the price is in. That is, let's say the price is currently here. And to understand where the price will go next, either up or down, and how to interpret our market structure, we need to wait until one of the key maximums or minimums, of which there will only be two in the range, is broken. Note that the structure, specifically the minor structure, will always have its own maximums, minimums, movements, bosses, breaks of structure, and so on. You can trade based on this if you have enough experience. We will discuss this a bit further. Let's move to a real chart, to a real example, and analyze the actual price movement. So, we have some historical price movement. I have marked the downward structure for you. You can see it for yourself, mark it, and analyze it. Pay attention to the fact that there is a false movement that removes liquidity. We will talk about liquidity in the following videos. Also, note that I define a break of structure, not by the candle, not by the wick of the candle, but specifically when the body of the candle closes below. Only in this case, when the candle closes with its body below, can I consider that we have confirmation of the downward structure, and I will continue to mark the structure. Let's review what happened next. We have a continuing downward structure. At some point, we see that there is a break of the key high. Let's mark it on the chart. We have a break of structure, which we denote as boss. This is indeed a break of structure, as the candle has closed above. So, after this candle and this price movement, we will expect the market to change its trend from a downward structure to an upward structure, accordingly changing its structure. A very common mistake made by beginners is that they incorrectly mark the key highs and key lows. If we are considering an upward structure, we must first mark the break of structure, and only after that, once we have truly identified the break of structure, mark the previous local extremum. In this case, the minimum also relates to the downward structure. Let me show you a couple of examples again of how this works. We mark a valid break of structure. Only after a valid break of structure can we mark the previous key low. In this case, if the price were to go down from here and update the previous key low, only after this key low would I be able to expect that the price would indeed continue to move downward. In other words, I would have expected that the global structure changed to a downward structure with this price movement. However, that did not happen. Let's continue marking. A little practice. Let's mark the key low. Again, let's mark the key high. Note that I am marking not by the shadows of the candles, but specifically by the body. Only after this do I mark the previous key low. Also note that after this break of structure, we have a key high and a key low. That is, let's consider the chart up to this price movement. Everything that happened before this price movement occurred within a range, meaning within a sideways price movement. Accordingly, only after the break and confirmation of the key high can I consider that the upward structure is confirmed, and therefore look for entry points upwards. That's all for now. See you in the next videos. Goodbye, everyone.